Hi guys, welcome to Money Theory. Today's video is part 2 of our discussion about propositions and elections. Last time we talked about Prop 14 and bonds. In today's video we'll talk about Prop 15 and commercial property taxes. The goal of this proposition is to tax properties that rent to businesses, offices, and industrial centers at market value. It's estimated to generate around $8 to $12 billion in revenue per year. The money is intended to fund public schools, community colleges, and local government services. But looking deeper into the economics of this, I'm afraid that this proposition is going to do more harm to the economy. This is because the tax increase will be passed down onto the businesses and consumers. This can lead to business closures and job losses. So let's explain why. First, let's explain property taxes and how they're currently calculated. Property taxes are an annual payment to the government for land and home or the building that you own. The tax rate is initially calculated at about 1% of the purchase price. California specifically is taxed at 0.77%. So a home that is $100,000 would have a tax bill of $770. Due to Prop 13, this tax can only be raised by 2% annually, max, regardless of the property's value. If the property value drops, that tax doesn't have a limit on the tax drop. For example, a home purchased for $100,000 has a tax bill of $770. 5 years later, that home is valued to $150,000. Without Prop 13, the tax bill would have increased proportionally by 50% to $1,155. But with Prop 13, that caps the increase by 2% annually. So let's start with the initial bill of $770. We increase it by 2% 5 times, and you can use this equation. 770 times 1.02 to the power of 5, and we get $850. Remember that property taxes reflect the purchase price only. That means that when that same home is then sold for $150K, the new owner would be taxed at 0.77% of $150K, which is $1,155. So you can see that Prop 13 saves people who hold their property long-term for a considerable amount of time a lot of tax money. And that's billions of dollars in tax money that the government's missing out on. Politicians are aware that raising taxes on homes would piss off a lot of voters, and that'll be political suicide. So the compromise is essentially to piss off just the business owners and property owners instead. That is why Prop 15 is only touching commercial properties and not residential. Opponents of Prop 15 also argue that the proposition would be a slippery slope, a transition into eventually repealing Prop 13. Like, if we already raise taxes for businesses, why not just raise taxes for homes next? This is like the saying, if you give someone an inch, they'll take a mile. Or if you give a mouse a cookie, he'll ask for a glass of milk next. But for now, let's explain how this new proposition can harm businesses. So unlike residential tenants, where the landlord pays the property tax, businesses usually have a separate section on their rent statement called a CAM charge. This represents the common expenses in maintaining and managing the property, such as utilities, repairs, insurance, and especially property taxes. So an increase in property tax is going to directly affect the business's expenses. Properties valued at less than $3 million are exempt from this proposition, but most commercial properties are valued more than that. Almost any place with more than 5 shops would not be exempt from this proposition. And with almost anything, small businesses usually get the worst end of the stick. As you know, the state has a recent lockdown to prevent the spread of the virus. This means there is a period of 3 to 6 months where businesses, especially small businesses, either operated at limited to capacity to prevent the spread of the virus, or were closed entirely. For instance, restaurants could only do to-go orders. Small businesses usually don't have the savings to endure 3 months of no income. And then there's the Paycheck Protection Program intended for small businesses. Mostly large corporations or the friends of politicians got the loans first, so the small businesses had to wait an extra couple months to get these loans. And what happened to those businesses that had to close? The people lost their jobs. Even after lockdown measures loosened during the summer, social distancing policies still limit the customer capacity. That means that some jobs came back, but most did not. California unemployment peaked around May at 4.8 million. Currently, we're still at 3 million unemployed. So increasing the tax burden onto businesses may close down more businesses and increase the unemployment numbers. And that's my economic analysis of Prop 15. I hope you enjoyed the video. If you'd like to support our channel, you can join our Patreon at patreon.com/moneytheory. You can also purchase from Amazon through the affiliate links in the description below. Also, don't forget to like, comment, subscribe, and share this video with your friends and family. Thanks for watching.